You and Nick Reinberger, this is 97.3 ABC Illawarra. Nice to have your company this morning. As you heard yesterday, we had a call from one of our listeners saying he was concerned about a law which was about to get into the Senate about restricting the amount of cash you'll be able to hand over to pay for anything. Now, I don't know about you, but I've paid cash for nearly all my cars. I tend to be a bit of a humble car buyer, and I've sold cars and motorbikes for cash and that kind of thing. But it is a recommendation from the Black Market Task Force, which comes out of Treasury, to restrict the amount of cash being able to be paid by an individual to a business or vice versa. They're trying to get people out of the cash economy and trying to get more into the regular economy so it can be taxed and hopefully be spent on good things. So what are the implications for this? Martin North is the independent financial analyst we turn to in times like these, and he's on the line now. G'day, Martin. How you going?
Pretty good.
What's the motivation here? What's the sort of logic of this?
Well, I think there are a few things going on. The Black Economy Task Force identified a whole series of issues. The task force was driven predominantly from big audit firms to the government and basically said, look, if you can reduce the black economy, you can perhaps grab more tax. But they were pretty unspecific about precisely how much you could save and what the implications are. But the government and Treasury honed in on this cash ban. So the idea is that currently legal tender is legal tender, so you can pay as much as you want in cash for any purposes, no issues. If the bill, which is currently in the Senate under review, were to come in, effectively you wouldn't be able to do that above 10K. So that means that, below that, no problem at the moment, although around the world, people have been dropping the limit. So don't assume that 10K is always going to be 10K, right? But so it's trying to sort of keep money in the banking system rather than outside the banking system. I think it's also reflecting the fact that some people are quite worried about the way that the banking system is behaving with low interest rates. And if interest rates go really, really low, people will tend to take money out and hold it in cash rather than in the banking system where you may have to pay rates to the bank to hold it in the banking system. So it's also connected to monetary policy and low rates.
Okay, that's interesting because we have, well, while you're on that subject, we have had some countries go into negative interest rates, which strikes me as just a bizarre situation. But I've often thought of that as being the bank pays you to borrow their money. But what you're saying is, on the other hand, if you deposit money, you will pay the banks to hang on to it. Is that what negative interest rate means?
Well, it can mean that. So up in Scandinavia, there are banks up there who are charging depositors to hold money in the bank. And so people, of course, will take it out. In Japan, where they have had this arrangement for some time, the sale of personal safes has gone through the roof because people are taking the money out of the system and basically holding it at home because it's worth more to you rather than being penalised for holding it.
You're not losing money every day.
Yeah, and interestingly, the IMF and even the Black Economy Task Force themselves said to make monetary policy work in this low interest, negative interest rate environment, essentially you need to keep money trapped in the banking system. So the unofficial reason, therefore, my theory is, for the cash ban is it's more to do with monetary policy than it is to do with saving tax leakage, right? But of course, nobody in official circles wants to admit that or talk about that. They keep coming back to we'll save a bit of money out of the black economy. However, it's worth noting that the size of the black economy is already shrinking, and the total amount that could be saved if this came in from the black economy is very, very low relative, for example, to the big end of town and the multinational, tax rorts that they have there, advised by those same big accounting firms. So, there's something else going on here than just simply tax leakage, and it's all to do with negative interest rates, monetary policy, and how individuals manage their financial situations in a negative rate environment. The final point to make is, if you're in the banking system, you've got no choice but to pay bank fees. You've got no choice but to effectively go through the formal systems. And, of course, people often will be able to pay cash and get a discount. But if this comes in, you'd lose that ability too. So you're losing civil liberties, you're losing personal freedom, and you're also potentially walking into a bear trap of negative interest rates, and all of those monetary factors that are there in the background.
Yeah, I did have a look at the board of the Black Economy Task Force, and as you mentioned, there are a lot of people on it from an auditing background. I know there's the chairman is from PricewaterhouseCoopers, and there's the tax man from the Chartered Accountants or the CPAs. Do you think the makeup of the board is significant in that respect?
Well, yes, I do. So there's been a very strong focus of looking, over here at small businesses and individuals and looking away from the big end of town. Remember, the big end of town get a lot of advice from those same auditors, and particularly the Big Four. They have very ornate tax-saving, quote, tax avoidance structures so that they reduce the amount of tax that they pay. And so the tax leakage from the top end of town is way, way bigger than amongst the sort of individuals and small businesses. And yet the focus is, in my view, down at the grassroots level rather than where it should be. And by the way, there are a whole bunch of laws that are already in force to ratchet down any leakage from the black economy. But those laws have not been implemented or policed.
What are these laws, Martin?
Well, essentially, even today, that there are already rules in place that says that companies, need to disclose a certain amount of information. For example, to the ATO, often they don't do that. There are others relating to property purchases and the reporting that should be done on that. That's not done either. And none of these are actually being policed or regulated. But coming back to police, think about individual transactions. If this law came in, and the Senate inquiry is running till February, and there's still a chance to have your say. They're still taking the feedback at the moment. But in this situation, who's going to police the $10,000 cash transaction that you might make to a business? How's that going to be disclosed? How's it going to be reported? Think about the amount of surveillance that would be required to make it work. This is part of a whole, worrisome, controlling state that I think we should avoid.
It's interesting that you mentioned that this black economy is drying up anyway. Is that because of things like cashless payments, tap and go? I mean, even at your average community market, it's been my observation that probably 3/4 of stores will have some form of tap and go. It's no longer cash just in your tent selling your baked goods or your tea towels or whatever. Is that a big factor?
Well, it's part of it. So there's definitely a migration to digital, and I'm in favour of digital payments and transactions if it's driven by personal freedom and convenience and those sorts of things. But there are also other steps that have been taken to ratchet down the black economy. And frankly, the ATO is quite across some of the bad behaviour and things like relating to drugs and those sorts of things. And by the way, interestingly, the casinos put up a big objection to the cash ban, saying, well, we still need to have cash in the casino world. And the government, believe it or not, under the proposed legislation, would still be able to pay cash above $10,000 if it was in the public interest. So this is a weird bill. It's poorly crafted. It is fundamentally questioning, I think, civil liberties. And to my mind, this should not be allowed to go through. The Senate is reviewing it now, and I think there will be a number of submissions. Interestingly, there was a Treasury submission process previously, and around 3,500 submissions were made to that earlier Treasury review, but Treasury then dismissed most of them, saying, it's just a campaign, it's not important. So they discounted the community feedback because there's a lot of community anger about this particular proposition.
Where was the anger coming from, Martin?
So it came from three factors. The first is just pure civil liberties. I can do something today. I can use cash to pay for cash if I want to, firstly. Secondly, the question about what this means in terms of, controlling and also the surveillance requirements that will be required. And thirdly, the link, which nobody in official circles wants to admit, to the monetary question, negative interest rates, and all the other factors that we spoke about. Those are the three things that people come to. But the critical thing is civil liberties, right? Today, you can use cash the way you want to. If you want to hold cash out of the banking system, you can. If you want to pay for something in cash, you can. But this new law...
You're grown up, you're taking a risk. That you've got a house fire or a burglary or whatever. holding cash? I mean, people do that with gold. Would it apply to other commodities, diamonds or gold or whatever?
Well, this is a very interesting thing. So there are the rule is by law covers pretty much everything, and then there are a series of separate regulations.
Covers everything. That is, covers any kind of tradable, valuable good.
That's where it starts, and then it excludes them under what's called the regulations. Not in the Act. It's basically a separate add-on that can be changed without coming back to Parliament. So the Treasurer can just say, well, actually, I'm going to include cryptos now, for example, or I'm going to include gold now. So they are excluded currently.
Well, that's interesting. So some people, and again, it's the big end of town, some people keep their money in vintage cars or guitars or paintings. And again, you're punishing the people that are trying to buy a car for 11 grand rather than the people that are keeping their cash in all sorts of different areas.
Yeah, my view is this whole thing is ill-conceived. It is something which I think is very worrisome, and it really just signals, control from the centre, not really understanding how real it is. One last point. Think about what happens in a power crisis, or, if the systems go down and you can no longer make electronic payments like we had quite recently. Or if you're in the bush and you're actually wanting to buy cattle and you can only pay it in cash. This can actually have big issues, as well, just in terms of being able to run the economy normally. So to my mind, this is poorly crafted. It is something which we should resist. And frankly, it speaks volumes about the way that central government thinks about, you and me.
It is interesting that you've made the civil liberties argument. There was a recent article by my colleague Richard Glover about this, about the government's plans to crack down on boycotts. Now, whatever you think of that, I would suggest it goes against the Liberal Party's brand to be attacking civil liberties, and the liberties of people to say, I will spend my cash the way I want it, and if I choose not to spend it on this company or this company, well, that is my right. Are we seeing that being eroded slowly, Martin?
Well, we are, absolutely. And interestingly, a number of backbenchers from the party in power at the moment are also up in arms about this, but of course they are restricted to what they can do. We've also got some other political parties also making a bit of a fuss, although I think in some cases it's a bit of a fake fuss, so it's not, not real. But yeah, the fundamental issue is we are giving up civil liberties left, right and centre, on the basis of security, on the basis of control, on the basis of tax leakage. But we're not thinking about the implications. We're sleepwalking, frankly, towards a police state, in my view, because civil liberties are continually being eroded. And I think we need to be very careful. They were hard-won rights that were won, over many generations, and yet we seem to be going in the other way now.
And just speaking of the macroeconomic environment, can you see us getting down below our current interest rates or even going into near zero?
I think it's very likely. So I think the Reserve Bank will probably pause for a few months, but probably next year will cut again. Then they'll be starting to use quantitative easing, in other words, printing more money to try and keep the economy going.
While you're on that subject, here's something I don't understand why printing more money makes a difference. It's just the commodity. It's not actually putting more money into the economy, is it?
Okay, so the critical thing to understand is that the economy is driven on debt. The more debt that is available, the more the economy can grow in theory because people will borrow more and then spend more, right? They're not doing that at the moment because they are debted out, firstly, and secondly, they're worried about their financial situation. So households are not spending. So effectively, quantitative easing has
But printing more money doesn't give that family more money unless they earn it, unless they do something to get that.
Well, what it does, it lifts asset value, so it artificially inflates property prices and stock prices, so you feel more wealthy, so you might actually then go spend a bit more. And secondly, it also flows through in the system. So think about the economy as sort of like a river, right? What you're doing is you're trying to increase the velocity of the river to be able to make more happen. But of course, in Japan, in Europe, negative interest rates and quantitative easing have gone precisely in the opposite direction. And even now in the US, we're seeing the Fed having to put the Fed economy on life support through these nightly transactions called repos to try and actually keep the economy going. These very, very weird monetary policies with very low interest rates, negative interest rates, frankly, are proved, I think, to be pretty flawed. And I don't see any difference here. I think we're going to, again, sleepwalk into an economy where the value of money is being reduced, asset prices will be inflated, but it won't fundamentally solve the critical issues that we really have.
Yeah, I mean, if it's just me and my family, I've got a certain amount of money in the bank, I earn a certain salary, how does the Reserve Bank actually printing more physical money affect me? Why would it increase my wealth in any way other than what I've got in the bank?
Well, firstly, if you own a house, house prices would probably go up. But secondly, the idea is...
So I don't even get that connection, Martin. Maybe I'm thick. I don't understand how printing more physical notes makes my house value go up.
All right, let me just take you through the chain. Right, so basically, if the Reserve Bank, let's say they buy bonds from the banks get more money, they want to then lend that money, so they're prepared to lend bigger loans to households. Those households then go and buy a property with a bigger mortgage. That lifts home prices. That means that they then have to spend more to be able to actually renovate their property, and therefore they spend more.
Right, okay, so it's down to the bonds that are helping to create that money.
Yeah, exactly right. And basically what you're doing is you're trying to get more people to spend more. But the fact of the matter is it's all driven on high debt. We've got some of the highest debt around the world, and yet the government is saying, well, we need even more debt for households at the time when they're not actually wanting to run a government deficit. They actually want to run a surplus, which is really weird. So all of the acid is being put back on households who are already debted out, and that's one of the reasons why households are not spending, because they aren't able to spend.
Right.
The money to spend.
Okay. For the first time in my life, I've got a little bit of clarity about quantitative easing, which is possibly why they keep voting it in, because maybe people don't understand it. They don't ask enough dumb questions.
Well, I think we need to be asking way more questions about the way the economy is run, and there's lack of disclosure, and even the Reserve Bank, when it releases its note on a Tuesday, there's no press conference, there's no querying from the media, whereas in the UK and in the US and in New Zealand, they run press conferences. We are very closed here, unfortunately.
Well,
we should be...
Interestingly, we have found that over the last couple of days trying to get someone from Treasury, we just get these one-sentence responses, and the media people seem to be most unhelpful at this point. So your point is well made. Great to talk to you. Thank you, Martin. It's been a pleasure picking your brains.
Good to talk to you.
Martin North, our local independent financial analyst here at ABC Illawarra.